Hey folks, welcome to Wednesday, the 6th of October 2021. What we've seen overnight was pretty pleasing commentary out of Gensler on the US not banning cryptocurrencies. And you saw, quite a nice inflection to the upside on Bitcoin from that. But really coming into this morning's trade in Europe, we've, seen equities and these markets, including the bonds, down quite a bit. DAX was down close on 2%. SPOOS is down 1% right now. It's 47 minutes past 9 a.m. GMT. And Dow is down 0.78, hovering in around the 33,918 price right now. um, and a resurging dollar coming up as well. So, there's lots of elements that you can pin this move to. Definitely the bonds coming off quite hard yesterday and continuing down in the overnight session. And what you get is a rise in the yields and the real yields, and therefore your gold longs then, because of the inverse correlation that you have between the yields and gold, you really then are looking for the longs in gold, but you're just not getting it. I mean, yeah, we saw a nice pop back up into late yesterday on gold, but it's all taken back now. We're going to look at this on the chart. So, a couple of people asking me, how come you're not recommending trade in gold or longs in gold? And it's really because of what we're seeing in the bonds. You're seeing equities down, you're seeing bonds down, and that yield is rising in the background. So what no one really charts for you is the rise in that yield, which is more attractive than gold, right? So, and it's more attractive than tech stocks. Okay, let's get over and look at these charts, right? So you can see is that downside move in DAX here, but we're going to jump. Well, actually, before I jump off of that, the downside move in DAX and the bonds here, you can see from yesterday this kind of break on this trend that we had, couldn't hold above, and then just really from about 10 a.m. yesterday, just continued to slide off. Then in the overnight, we just continued to slide off down to temporary support, I'd say. That's at 169 and a quarter. Uh, and you've seen the same activity in Tino's. Now, similar here, you see that push down in the overnight and really trying to steady off. It is more apparent if you kind of look at the bund um, on the daily here, or so the weekly actually, these inflection points up here from that push high on the 2nd of October, or so August, sorry, 2nd of August here. So from the high that we've had on the 9th of March over COVID to here, giving us the downtrend. And then really the highs here, 12th of August last 2019 and 2nd of September 2019, these weeks. Um, we just could not hold above, and down we go. Now, while we do have temporary support coming in here in the week of the 15th of March this year, I really see downside destination for the bond is down 167 and a half. Um, you know, so with that, you're going to have that continually rising yield. I see exactly the same if we go over to T notes. Uh, Here we are, T notes on the daily. And if I can just quickly switch this to a weekly chart, you can see here, I'll just lock this in. You can see here very similar pattern and activity. These highs into August. Not able to hold on the downtrend, and really destination is going to be 130.10s for me. Yeah, there's a little bit of a line in the sand at 131.7s to 131.10s. But I think that's just temporary support right now for this market, and we will be pushing down. Thus, higher yield, lower stocks, gold not really going anywhere if not down. That's how I see it at the moment. And sure enough, you're seeing as we transition to looking at these U.S. equities yesterday. Not a great day for the Nasdaq. Just not able to, as I was talking about in the pre-US yesterday, not able to really, yeah, we pushed up into the 100 and the bottom of this range, but not able to hold it. Really come the closing hour here. just not able to hold in that area, and then back down we go, giving up the majority of the meaningful gains that we had yesterday. And so now we're broken down on this trend. This is 60-minute chart. While we have had a really nice inflection point here on the Nasdaq yesterday, we didn't quite trade that trend to the T. I think today we are going to try and trade that trend to the tick, and give it a proper test. Now, looking at what that proper test looks like on a daily chart, right? We come back here on the daily, and here is the mega uptrend that we were talking about yesterday. Do have a look at the session for pre-US yesterday. And you've got, if you can tell me what this candlestick pattern is, I will send you a pint of Guinness. Answers in the chat room right now. But no takers immediately. But this is bearish engulfing. From yesterday's bid up trade, and trying to get above the 100. So we have bearish engulfing testing on a mega trend. 114, or well, 14,414 is and a half, coming in as that lovely low yesterday. We kind of got the trade on that at 2 a.m. I don't know anybody who was buying that at 2 a.m. But yeah, just this trend is everything for equities, and well, Nasdaq certainly. I don't know about the rest of the US equities picture. I think SPOOS is really finding it quite hard as well now, in and around this 100 EMA. Yeah, we have consolidation on the daily here on the right hand side of your screen, but it's really hard to not see this trade lower now this week. 42.19 and a half to trade. That is the low that we saw. Well, actually, it's the high of the 10th of May, 10th of May this year, and which proving resistance, and then coming in, it's quite clean support on the low of day on the 19th of July this year. So really, if we are going to be moving down for a test, this is really the only significant area for a test and for the longs. And then you're getting 200 EMA also coming into play, which is quite the move to the downside, I have to say. From where we trade right now, that's going to be about 4% down from where we are. And as we sit on the highs of, well, the all-time highs, we're about 5.6% down from the all-time highs. And a push to the 200 EMA is going to be about 9.3% from the all-time highs. So, how do we make money today, Tim? Well, I think, remaining short, probably on the 43.21s would be a nice area, line in the sand there to just kind of, set out your stall on this on the 60 minutes. You can see that there. And then it's in around the 100 EMA, so you can see in the overnight trade, just not able to reclaim one tick above that level. So I do like that area for the shorts. Further downside, I think, is on the cards now that we've broken sort of this sort of general, uptrend pattern here on SPOOs. And the Dow, I think it is going to move a bit slower than its counterparts, given it's the top US 30 companies. These are big, beefy, valuable dividend-paying companies. At least you not forget. So any downside in the Dow is really just a lot of swing traders are just going to be looking at this thing thinking, or a lot of investors as well are just going to be thinking, wow, this is just cheaper dividends to be buying essentially on the constituent companies. So yeah, I mean, while I don't see any of this downside as really that alarming, it's booking profits, it's people running their longs on puts, put protection, so I'm not really too alarmed. I think we are up here for good reason. I don't really see too much overinflation in these markets at the moment. But sure, look, I think being short on the 33,919. Should we push lower coming into this? I'll be looking to see what sort of reaction you get on the 919s, and then looking for that short similar to what we got there yesterday, or sorry, well, on Tuesday, reopen of trade, except yeah, in real time. All right, cool. What else can we look at? Yeah, oil. 79.80s you'll see here on the bottom of my screen. I've talked a lot about these levels in oil, and again this morning 79.80s is actually a 2018 level. I'll show you that on the daily charts. Well, actually, this weeklies here, but you can really go all the way back to the high of the 29th of October 2018. A nice little pullback area while we were on the way down that year. And so you can see just coming into play right here. So an interesting little area for this market to kind of take a little bit of heat off of what is our working back up through all these prices for good reason too. So where we sit now, taking a little offer from 79.80s, I think that's totally fine. Will the pullback go to 76.84s? Who knows? But we don't want to be fundamentally short this thing right now, or nat gas. Nat gas, we'll have a look at that as well. Had some nice trades on that yesterday personally. Um, Show you this on the daily chart, or sorry, the weekly bars here, but also bringing up the intraday on full screen. You can see yesterday we just kind of, once we got above this 6.030s, it was this lovely little area for a pullback. The morning trade was quite tight, but certainly showing trending was on, and sort of a break of this range here was pretty important to then push up, did a pullback on the spot 030s, and then just staying long into the close is really the best thing to do there. So the target is 6.552 for the swing trade. And then just to go back to the dailies, this is an absolutely massive level for this market. You look at the daily charts here, you can see just above my head, this kind of 6.552 is really big level of importance, putting in the lows in 2012, getting smashed in 2015, served as resistance from then on, 2016, and then coming into 2018, we tried to put in trade above, but just couldn't hold and put in new all-time lows there on that gas. But now we're back, now we're back. So once we get to 6.552s, you got to be fundamentally minded that we're actually only just about to enter into winter, and the continual shortage on that gas from the lack of investment in oil and gas drilling over the last 18 months. I think the prices are just going to keep going up. I think we're not going to spend too long at this level once we get there, and I think we're just going to keep going up, especially as we move into November. You're looking at the December 21 contract here, so do really keep a close eye on this market, and really you do need to only look for the longs here. Cool. So gold, yeah, I mean, I'll talk about gold. This trade has just been an absolute disaster. As I was talking about the real yield, just people would be looking for these longs. I mean, you can see on numerous occasions here these blasts of buying in here as equities move to the downside, but also you got bonds moving to the downside, the yield going up. You can't be long gold. It fundamentally is actually not working. That traditional risk off trade into the precious metal. So I don't like the longs in gold, no matter how many blips up we get in this, until we can find a base on the bonds, and I just don't think we've found that yet. All right, seeing Nasdaq moving further to the downside as I'm talking. Equities taking another push lower here now. So yeah, I'm gonna let you go. So listen, have a great session, and I'll be talking to you tomorrow. All right, cheers.